Hello and welcome. My name is Vaibhav Puranik, and today we're going to we're going to be diving into something a bit different, but very important for real estate investors, uh, and that is the recently passed Genius Act. Now, Genius is an acronym, and what it stands for Guiding and Establishing National Innovation for U.S. Stablecoins Act of 2025. So, this new law lays out the first comprehensive federal rules for payment stablecoins. Uh, and this act was signed into a law on in July 18th, 2025. Now, while it targets digital currency, especially stable coins, remember this law is not about Bitcoin. So this law is about coins like USDC and stuff like that. It could have a big ripple effects on commercial real estate and especially the multifamily sector. So how? What does the law say? Let's all discuss in this video. So let's take a first overview of what does this law actually do. So it creates a regulatory framework for payment stablecoins, which basically are digital assets pegged to the US dollar and backed by high quality liquid reserves. Okay, so think of coins like USDC that aim to stay at $1 value. Now, up until now, stablecoins existed in a bit of a wild west, but this law changes that. And the important thing it changes is this way, right? So first of all, it specifies who can issue stablecoins. Only regulated banks and other approved entities can issue stablecoins. No random startups printing their own money without oversight. I think it's good. Second thing is, it explicitly says that compliant stablecoins aren't treated as securities. Remember, bitcoins are treated as securities, but the stablecoins will not be treated as securities. So this gives clarity. Using a stablecoin won't accidentally trip securities laws. Safety and transparency. Now, issuer must follow anti-money laundering and know your customer or KYC rules. Hold 100% reserve backing in safe assets and meet new disclosure and consumer protection standards. In short, your stable coins should truly be as solid as the dollars they represent. Now, these are just the highlights, right? But the takeaway is really that the stable coins are getting legitimized and tightly regulated. This law isn't effective immediately. It kicks in after regulators write the detailed rules, which is likely to be in 18 months, and gives an existing issuers up to 3 years to comply. But the wheels are officially in motion. Okay, but now you're thinking, but I'm a real estate investor, not a crypto trader. Why are you telling me all of these things? So let's talk about that. Even though it's about digital currency, it opens up new avenues and efficiencies for real estate, right? Um, by the way, commercial real estate has started embracing stablecoins in certain transactions, and this law could turbocharge that. It so one way is it'll be faster and cheaper deals. Now think about the last time you wired money for a property closing or waited for funds to clear, right? It can take days, especially if investors overseas are involved. Stable coins can settle payments within minutes instead of days, no matter whether it's from overseas or from local. So cross-border investment does become smoother because in US, I think if you're taking money by wire, it's probably takes at the most 1 day, not more than that. But in in a cross-border, it is taking multiple days, right? So that'll get easier. Now, stablecoins work on blockchain, and that means potentially you could start using smart contracts like programs that auto execute when conditions are met. Like imagine an escrow that automatically releases funds to the seller once the title transfer is recorded without waiting on a third party escrow agent. So it could be smart escrow, right? Um, these smart contracts could automate escrow and payment milestones, reducing the middleman and the paperwork in the property sale. It's like when digital escrow officer who never sleeps, right? So that's why the speed could be faster. Tokenization and fractional ownership. Perhaps the most exciting part is that tokenized real estate, right? Whereas with clear laws, pieces of property like equity in apartment building, right, can be converted into digital tokens on blockchains, and this will allow fractional ownership. And today also there's a fractional ownership of multifamily, right, through syndications or REITs and all, right? But it'll be all on blockchain, um, so it'll be much more transparent, in my opinion. Um, and then you can have at a less cost, you can have a smaller fractions, right? Meaning you could have 1% token on multifamily portfolio, um, and you can trade that token in a secondary market without people not getting involved, right? The syndicators not getting involved. Yeah. So it kind of brings liquidity, in my opinion, to the otherwise illiquid assets, right? And then everyday use, like think about it, like um, I'm not surprised in a few years your tenants will start paying rents using stablecoin, right? By the way, some property management platforms already accept stablecoin payments. Okay, um, but I think after this law goes into effect, we will see broader adoption of those things. And like stablecoins can unlock capital from crypto world into real estate, right? And it's easy to convert Bitcoin to stablecoin, and then stablecoin to use that stablecoin to buy real estate, right? So I just think that it could unlock new capitals. Um, yeah, so those are, I mean, this is how it's going to impact the commercial real estate or multifamily real estate in general. Now, there's another very interesting thing that's happened. Okay, it's not necessarily related to Genius Act, but it kind of goes really well with Genius Act. Is that federal regulators have sent a clear signal to mortgage lenders recently. So, start factoring crypto assets into loan decisions. In June 2025, the Federal Housing and Finance Agency (FHFA), that's the most that's the overseer of Fannie Mae and Freddie Mac, ordered those mortgage giants to consider borrowers' cryptocurrency holdings when assessing loan risk and qualifications. In other words, if you have a pile of Bitcoin or stablecoins, that could count towards your assets or reserves when you apply for a mortgage. Very interesting in my opinion. Now, why does this matter? I mean, it, it matters a lot, right? I mean, um, Fannie Mae and Freddie Mac are huge in real estate lending, including multifamily. They purchase and guarantee a ton of mortgages, around half of the 12 trillion US home loan market. And they're key financiers for multifamily projects as well, right? If they start viewing stablecoin or crypto holdings as a part of borrower's financial picture, it opens a door for more investors to qualify for loans. Um, you might not have to liquidate your crypto to show cash for a down payment or reserves, which also means avoiding creating a taxable event just to qualify. Uh, Now, the shift is backed by current administration's pro-crypto stance, right? Uh, but I'm not sure if they'll change, even if the regime changes, right? Because these are forward-looking things. Yeah. Now, let's see what are some of the experts say about this thing, right? Um, Daryl Fairweather, chief economist at Redfin, and I explained that this policy is a big win for advocates of cryptocurrencies who want crypto to be treated the same way as other assets are, right? And she points out that traditionally stocks count towards your asset reserves in loan applications, so why not crypto? As long as lenders properly discount for crypto's volatility, um, I think it's reasonable to count crypto investment toward reserves. In short, if you have $100,000 in stable coins or bitcoins, a bank might consider maybe 50 to 70% a part of your assets. And I think stable coins will be treated differently, in my opinion, than Bitcoin because they'll be traded to US dollar. Stable coins will be traded to US dollars. Now, another economist, Danielle Hale, for Realtor.com, chief economist, Realtor.com, noted that if Fannie and Freddie are going to accept cryptocurrency as a collateral, that's a strong incentive for banks to shift their practices. So banks follow the standards what Fannie and Freddie will accept. So this could make crypto-friendly lending go mainstream. Like other banks will also start adopting those standards, right? Now, for a multifamily investor, consider the implications, right? You might soon see lenders counting an investor's stable coin reserves or even Bitcoin reserves when financing the apartment acquisition. Sponsors groups who have raised capital into crypto could potentially use those holdings as a part of net worth or liquidity calculations for loan guarantors. It's a developing area, but the direction is set. Now, very important. Before we finish, a quick reality check. None of this is happening overnight. The Genius Act set things into motion, but regulators are still hashing out the fine print. The law will fully kick in by late 2026 or early 2027 unless agencies move faster. So we're talking about changes unfolding over the next couple of years. Now that said, smart investors pay attention early. This is the time to start learning the lingo and the tools like digital wallet. So you won't be caught flat-footed when these innovations hit the mainstream. So again, thank you for listening uh, to this deep dive on Genius Act and the other crypto-related regulations and its impact on commercial or multifamily investments. It's not every day that the crypto law comes along that real estate folks need to care about, right? But this is one of those rare crossovers. So if you enjoyed this video, then please share and subscribe our YouTube channel, Old Money Capital. We keep releasing interesting information about real estate space ahead of other people. So that's it. Until next time, happy investing.